Good evening, friends. This is Professor Shirish Kulkarni. Let me introduce myself. I was professor and head of the department Accounting and Financial Management in Faculty of Commerce, MS University of Baroda. Then I was Vice Chancellor to Sardar Patel University, Vallabh Vidyanagar, District Anand, Gujarat. I am going to speak on a simplified version of the goods and services tax. But before beginning the goods and services tax, let's think about the earlier taxation before GST in India. Rather, the question arises, why taxes? Rather, Benjamin already has stated on this particular taxation that there are only two things certain in the life. One is the taxes and the death. So it is very important to understand the taxation. Why taxation? Obviously, the government needs the revenue to spend on development of the country, and our country is developing economy. Yes, still nowadays it has been stated that we are at the 5th number in the world economy of the different countries. But still the government needs the revenue, and for that taxation is the best source. Maybe it is a capital expenditure or it may be the revenue expenditure. That expenditure is to met by the taxes and other sources of the government. Then coming for taxation, there are two types. Type 1, it is a direct tax, and another is the indirect taxes. In direct taxes, we can say that it is the income tax, corporate tax, and for the state government, it is a professional tax. One can say about direct taxes that this is a tax which is paid by taxpayer directly to the government, means there is no intermediary in between the government and the taxpayer. That's why it is being said as a direct taxes. Simultaneously, it is a progressive taxation. What does it mean? The taxpayer's income increases, then obviously the tax levied on him will increase. That's why it is called as a progressive. So lower the income, lower the tax, and at a specified limit, if the income is less, then there is no tax at all. In a way, we can say the income per annum, if 5 lakhs or less, then no direct taxes are to be paid. That's what is there. Sometimes the corporate tax is also in question. Sometimes it is also said that it is the income. Yes, it is an income tax, but income of a corporate, a company. Companies Act 2013, under which the companies are regulated, their income is taxed as a corporate tax. Rather, it is particularly stated corporation tax. So that's what about the direct taxes. We are not going much on the direct taxes, but our target is indirect taxes. There are types of indirect taxes before GST. Still, one indirect tax is still there separately, which is not included into the GST, and that is the customs duty. The customs duty is the indirect taxes. But let's say that why it is called as an indirect taxes. It is called as an indirect tax because taxpayer makes the payment to the dealer, and then dealer deposits it to the government. What does it mean? There is taxpayer and the government in between. There is an agent of the government who is registered. The taxpayer is not registered. If we look at direct taxes, then income tax, corporate tax, there is a registration of a taxpayer directly. In case of individual taxpayer, has a permanent account number, commonly is used as a PAN. So that is there. So in case of indirect taxes, The taxpayer individual has not to go for any registration with the government, but the dealer has to go for registration. That is why it is called as an indirect taxes. Government and taxpayer, in between there is an intermediary, there is a middleman who will pay to the government. That's why it is called as an indirect taxes. In case of indirect taxes and direct taxes, if we look at the contribution to the GDP of the government, gross domestic product, nearly 50-50 indirect tax and direct tax is being collected by the government. First it is levied and then it is collected. So that is being assigned the job to the government. The government, again, there are the state government, central government and the local authority. So this is levied based on the constitutional authority. The central government is empowered, state government is empowered and local authority is empowered because of there is a provision in the constitution. In constitution there is a schedule 7 and in schedule 7 there are entries under union list, state list. These taxes are empowered to be levied. In case of direct taxes, there is a entry number 82 for income tax individual and 85, entry number 85 is there for the corporate tax. Similarly, there were indirect taxes before GST. Some of them are still there. For example, the central excise duty. The central excise duty is or was both levied on production, manufacture of the goods. So in a factory, some goods are being produced, then central excise duty is levied. Why I am saying it is there and it was there, because there are certain products, let's say the petroleum products, the central excise duty is still there. Similarly, there is a service tax which was levied earlier, and that was from 1994. Before that, services were considered as serving the God, so there cannot be any taxes on serving the God. But then when it has been realized that different countries are levying the taxes on services, and that is a major contribution from service tax to the government revenue, that's why Government of India has also levied from 1994 the service tax. There is an entry tax also, entertainment tax also. One more tax is there which was regularly collected, that is CST, Central Sales Tax. That Central Sales Tax, if we take all these type of taxes, you will find that there is a multiple taxation system. There is a destination based taxation. There is a origin based taxation. Why I am saying so? Because Central Sales Tax was taxation on origin base. That is, the product where it is produced, the tax revenue will be to that state government only. Central Sales Tax will be collected by the state where the goods are originally sold. So that's how it is the origin base. Then if let us say the value added tax which was levied on taxes for sales. When the goods are being sold, the value added tax was levied, and that is a multiple taxation. When the goods are changing the hands from one hand to another hand, there will be a value added tax to be levied, but there is one specific provision which is there in service tax also, which was there in service tax also, and which was there in the central excise also. That whatever tax is being paid, excise or service tax or value added tax, where it is paid to the supplier, then that tax is allowed as an tax credit, which is called as an input tax credit, ITC, which was allowed. So this is related to what I have stated, the earlier tax system before GST. From 1st July 2017 2017, the GST has been implemented from 1st July 2017, and it has been subsumed. The indirect taxes, nearly 17 taxes have been merged into, subsumed into the goods and services tax. So that is our focus point, and I am using the word simplified GST. That version, simplified version, we are going to talk on. So that's goods and service tax we are going to study, we are going to listen. I am going to talk on that. See, this GST is being also stated that one nation, one tax. There were several taxes, and that is what I have called as 17 taxes before GST. So that multiple taxation has become only one single tax. That is, service tax is in GST. Central excise duty is also in GST. Value added tax is also in GST. Entry tax, entertainment tax, CST, central sales tax. These all taxes are subsumed in the GST. Mind it, when I have stated earlier also that ultimately the government is empowered by the Constitution. What was earlier? Central excise duty was levied by only central government up to the production of the goods. Value added tax was levied by the state government only after production. So central government was having no role in collecting the value added tax. So assigned to state government. Service tax, it was assigned only to the central government. So there were stages at which stages the central and state government was levying. As I have stated, there is a Schedule 7 in which the state list and union list is there, and that empowers. So when GST is one for all taxes, obviously the constitution amendment has to take place. So there was 101 amendment to the constitution was made, and then the government, state and central governments, all taxes were merged. But still, the authority of the state government is not diluted. The authority of central government also is not diluted. So what is the compromise way out? And the compromise was the central government and state governments 50-50 distribution of the GST will take place. So central government will levy the central GST. We call it CGST. And then when the state government is collecting the SGST, that is also 50%. So CGST, SGST, that state and central government have combined, and 50-50% they are going to distribute. Mind it, income tax has nothing to do with the GST. Similarly, the customs duty is still levied and collected by the central government. GST has nothing to do with the GST. So this taxation partition is clearly maintained by the state and central government. So this is what is just beginning part I have tried to explain on GST. So next time we will go into the detail of GST for the next episode. We will see that. Thank you.